So I'm on gold on that 4, and I have a kind of a bullish flag. I'm expecting a sell. I'm expecting a buy up to at least around that region there. So that's where I would expect my buy positions to hit the second TP. So the first TP can be around here. Yeah, so let's first enter a position slowly. I'm going to use 0.09 for the first time. So I'm just going to be entering. So I'm going to be, let's put around 4 positions. Right. Alright. Now all you want to see price do is actually reach that region. That will be around 3k. So you can simply just wait for this trade to play out. Now, there's also another issue which I'm going to share with you. So as you can see here around this zone here, market faced resistance at around this level here. If you remember your portfolio, this is a Quasimodo. So market will face some bit of resistance at that zone. So if you're to buy currently with a big lot, you can put your first TP at around that zone there. So be around making $200. That will be a first area of confluence for the market to go. Then you can take your first TP. But if you're to hold like me, you can simply just wait for the market to reach around that level there, which is around 3k, right? 3k there. That's where you can take your take profit if you're patient enough. That is, if you're patient enough. So this is where market faced prior resistance. So it may first of all face more resistance as it reaches that level. So you have to be careful of that. Also, we have a kind of a Quasimodo around here. So we have the head. We have the head right here. We have the left shoulder. Then we have the right shoulder, which is currently forming. So if we expect price to at least reach that zone, and then, but if price doesn't reach that zone, we want to get out of this trade when we have a loss of around, this is my first stop loss below this zone. That's around 300, okay, $200 of a stop loss. So if market comes to that zone, I'm willing to get out of the market because I don't see any other reason I should be in the market. Remember, this is a bullish flag. In most bullish flags, market will tend to find the highest or the extremes demand zones. This is the extreme demand zone. So there is a high chance that market can take off from this area and then continue going up, or it can simply just drop. Like market can simply just drop all the way down to that zone there, can drop all the way up to here. So there's also that probability. So you have to be very careful when you're trading bullish flags, because as we have seen in most of the cases, bullish flags tend to liquidate most people's assumptions. So you have to be careful of that. But the reason why I'm buying here is because I have a second confluence. My second confluence is around this resistance zone. Market already reached this resistance zone here. So even though we haven't reached the extreme demand zone, market has already found enough support to actually push up, right? So yeah, guys, I'm going to be holding this trade for some good time. So I will keep you updated once market breaks out of this consolidation. But as for now, those people who are looking for sales, you're not wrong. And people who are looking for buys like me, we are willing to go with at least a stop loss of around $200. That's what I'm looking for. So if market fails to give us that push above, because we want to see a push above this, the head, then that's when we can know that market is now willing to actually take out this first level. I don't know if you can see. So this is the first zone that I want to see market take out, this zone around here. So if market takes out that zone, that will be your first take profit. Or if you're patient enough, you can wait until we have put my shadow zone there up. So that's it for gold. As I said, I will be holding this trade for some time, so I may not be updating you sooner on this trade. Yeah, so I won't be updating you sooner on this trade, but as you know, we shall just keep on trading and see what happens in the market. And yeah, we shall see. Let's wait and see.